We are more than halfway through 2025, and the new cycle is by now well established. At the start of the year, we saw promise for 2025, and I observed that real estate was at an inflection point following the MIPIM trade fair in March of this year. I think we're past that inflection point, and we are seeing the projected themes and continued recovery of real assets in action. The living sector, residential and alternative forms of living, remains the property type of choice for most investors, with undersupply conducive to value-add plays in particular. We also believe that affordable housing and student housing offer attractive risk-adjusted returns to still both core and value-add investment styles. Data centers and hospitality have significantly grown in popularity, and we see this trend continue for this foreseeable future. And mispriced opportunities remain for office and retail, albeit on a more selective and market-specific basis. In infrastructure, digitalization and the energy transition, two of the four megatrends shaping our investment outlook at PATRIZIA, currently provide the most attractive investment options for investors. In addition to these observations, and with the benefit of insights accrued over the past 7 months, here are 5 positive trends we're now seeing in real assets investing. Firstly, real assets are well placed to maintain or improve their standing in investors' portfolios. Geopolitical and inflationary risks put government bonds under pressure, and real assets can provide stable, long-term income as well as inflation hedging characteristics, both valuable attributes for any diversified portfolio. Secondly, Europe is re-establishing its credentials as a top destination for real asset capital, aided by a supportive fiscal and monetary policy environment. When it comes to the continent's digitalization and decarbonization ambitions, there is a consistency of messages which appeal to investors looking for long-term investment visibility. Thirdly, Germany has ample fiscal leeway, and the stimulus program just announced will favor infrastructure and real estate and will have positive spillover effects for the rest of Europe. Fourthly, we see opportunities in the industrial sector, albeit the focus needs to be aligned with the emerging tailwinds, such as rethinking supply chains to adapt to changing flows of goods and a resurgence in defense manufacturing across Europe. And finally, development and asset management professionals will be the key players to decarbonizing the built environment and delivering attractive returns to investors. At PATRIZIA, we have built a strong in-house development and asset management expertise, and we remain open to new projects on top of those we are already executing on, such as the recent lease agreement with Cleveland Clinics on Grosvenor Place at the heart of London, where we are repositioning office space into a world-class, cutting-edge clinical setup. Overall, we remain fully aligned and focused on executing our strategies along the lines of the megatrends that we have identified: digitalization, urbanization, energy transition, and evolving modern living. These constantly inform our long-term investment parameters.